I had a technical fail on my AstraZeneca video, so I'm going to record it again. Way too late now. I had a pre-market video up before all this happened. And so yeah, we got news from AstraZeneca that they announced that they can deliver 1 billion doses of their vaccine that they're working on with Oxford University. And AstraZeneca is also tied to Moderna, the mRNA ticker, and the mRNA company that's producing messenger RNA vaccines. And then AstraZeneca also uh, has a drug. Oh, what's that thing called? Um, mm, oh, Calquence. Right. That is already approved for blood cancer use, but that has potential use for anti-inflammatory and the coronavirus treatment as well, and for the cytokine storm for the lung inflammation. So I have a few things in the pipeline here, but the big news last night was that this stock could have been such a good trade. Um, the big news from last night was, or this morning, I guess, yeah, it probably came out around the end of market yesterday, based on the action here, is that they can produce one, is it a billion? I think it's a billion doses, yeah, of the vaccine they're working on with Oxford, and this is a vaccine that has not gone to trial or anything like that. They're just talking about potential delivery dosage amounts, um, and there's no news on whether that vaccine's viable or anything like that. And that's what this explosion overnight in pre-market is response to that. And so here's your short peek on stupid news that made it all the way into market, and it's too late for that. And now we'll have to see what kind of valuation is reasonable here. Um, kind of the buzz is over on that one. But we can take a look. We can take a look on just at the stock in general. So let me cover this stock, and then I'll talk about Moderna again because that's related to this stock. AstraZeneca owns what 7.7, I believe. Yeah, 7.7% of Moderna. So they have a stake in the other vaccine that's coming out as well. So this is an interesting company. They're shifting from biopharm to biotech, and they have a couple logs in the fire in terms of coronavirus vaccines and things like that. And let me go out to hourlies and let's take a look. Let's take a look at how this thing has kind of performed relative to the S&P and see where we are. So where is it? Feb like 20. Okay. All right. So this is how it's performed during the crash, which is pretty good. It's up on average, slightly up, almost flat over the whole length of the crash so far. And let's get the S&P in here. Okay, so you can see here that it does go down and up for the most part with the general credit contractions that are affecting the whole market. But it's bouncing higher than the whole market, which is expected in general from the health sector to perform well during a contraction cycle. But the general health sector hasn't performed that well. It's been general like downtrend in the whole health sector over this crash so far. And this is one of the best performers, and they're an interesting one because they're biotech. And so if we get another down move, we have probably a month left in this cycle here. And so I mean, if we get another down move in the general credit contraction cycle, that would definitely be affecting this stock. So I was thinking about this news peak potentially coming at the same time as a down move in the S&P would be, I don't know, not necessarily a good short because you don't want to short healthcare industry in a credit contraction cycle. That's one of the best sectors in a credit contraction cycle usually. Um, But it's completely reasonable to short these nonsense fake peaks when you get dumb news like this that says they'll be able to deliver something that's not even confirmed or even like viable at all right now. Um, so that this kind of run up stuff generally just peaks and comes down. Sometimes it gets a second pop, and so I had the video out in time to completely do that trade, and um, my video failed, and I accidentally uploaded my previous video again. So this is a way less interesting version of my last video. Sorry about that, and please hit the like button to help me out with the YouTube algorithm. And I should have a subscribe button around here somewhere. But let's look at mRNA because this is a related company that's coming out with a vaccine. And yeah, as I said, AstraZeneca owns a big stake in this company. I think it's 7.7. Yep, 7.7% right now. And so earlier this week, we got similar news that the mRNA stock got phase one trials, and it did not affect and the injection sites very much. They got very few negative reactions to the injections, and they're claiming that it's working. And phase one really doesn't test if it works. It's just a small batch trial to see if there's big negative effects to actually administering it. And there haven't been, which is good. So it's moving forward to phase two. And yeah, and they got this huge jump. And relative to their stock price, let me get the S&P out here because this stock hasn't really had much to do with the S&P. I suppose it did sort of wobble on the way down a little bit, but this stock is largely unrelated to the S&P because it's a small biotech that's working on a specific thing. They're working on an mRNA vaccine, and you can go to my playlist. I have a medical playlist for these type of companies right now, and we're going to keep getting news flashes like this on these type of companies over the next year or whatever. And so this is another big one where it went up it went up big time on the news and then corrected back down. And that's usually what you get on these news flashes is a little hype thing. That's a good spot to short, and then you can get down to a reasonable price area and figure out if it's a good long or not. And so these guys, I don't know. I mean, if it's like a lottery ticket, if they have a successful vaccine, an mRNA vaccine, I mean that would be monstrous. And you know, they've been on a huge upward trajectory here also. So there's definitely some bubble risk in here, and it's already getting up there. So, I mean, the upside is still huge, and now there's a lot more downside kind of built in here if it fails. And so that's Moderna, and the AstraZeneca stock isn't super tied to Moderna, but it's highly related, and they do own a stake in this company. And that's the big medical news this week. And then also Sorrento is working on antibodies, and they had good like test tube and fermenter results, and they're planning to move to phase one. But all of these things are projected to come out next year sometime, best case, and they have to go through all the phases, 3 phases, and then FDA approval and all that stuff. And so yeah, this is what generally happens. You get that super pop, and then right now it's just kind of the upper edge is now sort of like a floor on this one. And so this is probably a good, and not investment advice, but um, if this was their valuation before good trials and they're just here now, I mean, that looks like a decent spot right there to go and get a lottery ticket you know, if you're into lottery tickets. All right, so let me take a look at the S&P and see the action that we're getting today, and we will figure out what's happening because we got a bull run yesterday that looked like it was going to run up a little higher than it did, and today we are going to see what we're getting, and we're getting a little more bullish action to open here. And so, yeah, we just kind of halted that 5-wave. My last video, I was looking for a little bit. Oh, that's pretty ugly. All right. 1, 2, 3, 4, 5. I was looking for a little bit bigger 5-wave potentially overnight last night. And that got completely halted and flipped over. And you can see here this, I'm calling it the double rainbow. We have just this big curving shape. Let me get, I'm on hourlies. Okay, good. So yeah, here's the whole crash, and we're getting this arcing shape, and we didn't get the usual kind of shape for credit contraction cycle, which is a down and then sort of a bounce and a bounce. We got no middle bounce, and that happens sometimes. It's less common to get that kind of shape than middle bounce, but we just got this kind of rolling thing, and I would like to point out that you can see the action here as along the outside edge, and then you can see the action here as along this edge, and then we get these hits here, and they're all curved at an angle that matches the edge here. So you can see here, this grinding action is on the angle of the circle at that point, and you get this uphill kind of grinding action on the angle of the circle here. And then right here is our first downhill kind of grinding action. See right here? We get back to the inner circle here, and we get downhill grinding action, and we get these reactions all on here, and that's our first downhill reaction. That's clear. So I'm like, oh, okay, we're headed on the way down now on the circle, and then of course we shoot all the way back to the other side, and we're up here. And where's the top of this thing? Trying to work on the shape of the circle, but it looks like we're getting grinding action all along the edge of the circle right here now. And I would like to point out the moving average here is our, which moving average do I have here? I have 130 days. So a lot of people are pointing out the 50-month, or the 50-week, I'm sorry, moving average, or the 200-day moving average, which is a little less wobbly than the one I have here. But I like the 130 because you just get more reactions across the 130. And in this case, it's a little bit higher line here. So I think this is a higher upside target, because if you check out the 200, you'll see that the 200 is less reactive to these kind of moves, and it's actually a lower target on the 200, around 3,000. I was playing around with the moving averages, and the 130 does a lot better reacting to bull market and bear market kind of turnovers. And so you can see that the bull market activity pretty much stays on top of the 130. And then when you get these bear market kind of moves, they'll break down underneath. And so in a bull market, it's really good at capturing the majority of the bull market activity and capturing the majority of the bear market activity. And here, let's go to dailies. Okay, so I'm back here at the financial crisis and the housing bubble crash here. So same kind of thing, like on the way up the bubble in a bull market. This is the 130-day moving average. You just get a couple pokes underneath, and occasionally you get like a big, move down, and that's what you get with the moving average. But then when you pop a bubble and you're going down, it's really hard to get above this moving average. Occasionally you'll get up above it, but most of the turnovers are going to be below the moving average here. And so in the housing bubble, we got a more gradual top, and then we got a big waterfall here towards the end of it, which is interesting. Most bubbles, you get a bigger waterfall at the beginning. But going up our bull market, you can see that the majority, coming out of the crash, we got a little bear side action here. But once we get into the bull market, the majority of the action is all on top of this moving average, and then you get these kind of bear traps underneath and a couple little pokes. And this is a really good moving average for encapsulating this crash here. that reversed into a steeper trend line, and it also does a good job at getting these ones. And so this is kind of an upper edge here, and this crash, and this line is indicating that we're still in a bear market now. And if we stay down, it continues a bear market. But if we get above this line and get up, then that would be a bull market indicator, because this line sort of keeps bull markets to the upside and it keeps the bear markets to the downside of this line. And we have made it way up here. I mean, this is a really deep gash, and making it all the way back up here around this line is impressive. Usually in the crashes, when you get a big down move like that, it doesn't make it all the way back up here. Yeah, so that's kind of the moving average. And let me flip through the cyclical stuff here. And so here on the MACD, we are up here in bull territory during a bear market, which is, I can go back actually to the financial crisis and take a look at that. Just for example, here when you're going down. So I mean, this is good here because there's a couple smooth rounded tops in the financial crisis that look like our rounded top here, and so you can get a high bounce or a medium bounce, or this one ripped off into a liquidation kind of waterfall. But when you get up here, like if you're in a bear market and you're breaking that average, that's dangerous territory. And you can see here we're barely into the bear market, and this one is not super bullish here. So I'll ignore that one to some degree. But here we get up into the bull side territory, and you can see this rounded top, and we actually got above the moving average here. And that leads to kind of a downside. And you can see in a bear market, the majority of the action is going to be on the bear side of the line. And so this line, if you're staying in the bear market, you do most of your action below that line, and then on the MACD, that's a bunch of wavy stuff below here. And then when you do get up into the bull side of the chart here on the MACD, it's usually going to turn over and go back down to the bear side. But this crash, I mean, we just have one big down and one big up, so we don't have a bunch of activity to kind of use to gauge where we are. I mean, we just went down and we came back up, and are we going to flip back over? Or are we just going to keep going up? Nobody knows what's going to happen. And so using the MACD is not exactly going to give that away, but the moving average is a big thing. So if the moving average keeps us down, and then we are clearly in a bear market, then it is reasonable to expect most of the activity to stay bear side for a while. I mean, these bubble kind of popping bear markets usually take a few years. And in the case of Japan, it was a few years, and then it dragged out into like a 10-year, 20-year deflationary sort of wobbling down move. But the actual bubble unwinding usually doesn't take that long. It takes a few years or something like that. And yeah, and then the few times you do get to the bull side of the chart, those are dangerous areas where it usually flips pretty hard in a bear market. And it's not always a rounded flip. It can kind of wobble and stuff up here, but when it does go down, it's usually a big deal. And the higher up you are, the less severe the down move is going to be. So I mean, we're up pretty high in our market. Let's get back and look at ours. Yeah, so that's all we have. We just have a big liquidation waterfall at the start, and now we're up here in in the bull market side of the chart on the dailies, which this is sort of the month over month outlook. And it started to come down, and now we're crisscrossing it, and it's not coming down yet. So it's not clear at all from the dailies if this wants to go up or down or what is going on. It's just kind of stalling out in bull market territory. And so if this is a bear market, it's sort of a dangerous place to be, but up moves in this territory would be big up moves on the chart. And so, like for the bears want it to flip and get to the bear side of the chart in a hurry. And the bulls want it to just stay up here in bull territory and do stuff. And that would just be up, 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 up if it stays up in bull territory. And so right now we're in bull territory, which is very dangerous for the bears. But if this is a big bear market, this is vulnerable to a big flip and also dangerous for the bulls. It's a really dangerous spot near this moving average and a sort of rounded top on this thing. It's some dangerous stuff here. So, and not really great signals on from the technical indicators exactly where we're trying to go right now. But in the credit contraction cycle, we are getting this kind of shape, and the credit contraction cycle generally likes to pull down. Like you'll get bear market bounces in a credit contraction cycle, and so this is a down cycle inside of a longer bear market, is what this is projecting, and it's projecting this to just keep turning over. And I don't know how big of a downside there could be here. We're up pretty high in bull territory here, which would indicate a smaller downside turnover. And it could just do something like this if that scenario plays out. And I guess here would be a bear target to get to from the top down to this inner circle and just get some action here as a next target, and then whatever, do this, and then there's no more inner circle, and who knows, it could go down a lot or it could completely just stay up here and just go back into the next cycle. But when this cycle ends, whether it's up here or down here or wherever we are, we should be switching into a credit expansion cycle for the next 3 months for sure, which should be a bullish cycle inside of a longer term bear market. And so that will completely switch all the fundamentals here. But for right now, it looks like we are still in a credit contraction cycle, and we're sort of late cycle trying to figure out what's going on. Let me flip through. So this is the dailies, and when we get into the hourly charts, we can see what's going on. And so on the 4-hour, we're kind of stalling up here in bull territory. And starting to pull down, but this is still bullish, and moving up is looking a little bullish. And less bullish here, and trying to turn up is a little bit bullish. And this is kind of looking out to maybe the end of the week or something. And we've come down almost to neutral, but we're trying to go up, looking a little bullish here. And then getting closer into today's trading, we've gone bearish, but we're trying to go up. And yeah, 30-minute. Okay, this is going up pretty good. Trying to get back into bull territory here. So it's trying to go on a little run here. And I didn't get this video out early enough. But I'll get this thing uploaded now, and we'll see what goes on. And so this is going up. It's still diverging, but it looks like it's not trying to go up more. It's not accelerating up, and it's still diverged to the upside here. So this is a little bull move here that we're on right now, and this one down to the 5-minute looks like a little counter action, but this is up here too. So this is up in bull territory, and it's not pulling it down. So this looks like a bull spot, and now that I'm saying it, it's going to be flipping over. So what you can do is check these things out and flip through the different time scales and see what kind of trend you're on in each time scale. But it's not going to really give away a flip I mean, you can get a really dramatic turnover pretty much at any point, and it'll flip. But this will give you the trend that you're on different timescales. And so right now it's trying to make a bullish move, and we're just kind of hanging out on this circle and trying to get up a little bit higher. And so yeah, so to the upside we have this. I don't know that it's exactly a like a resistance line. I mean, it's just like the higher you go here, the more likely it is you turn around if it's a bear market. But if this cycle has ended, like if this whole run is part of a new cycle and like the whole credit contraction cycle is over, then you would expect to get up above this line, and if we got sort of above it and back tested above it, then that would be a clear indication that we're in the next cycle already. But that's kind of a backwards indicator that we had already kind of switched back here somewhere, and that's not useful for projecting really. And what we really would like to see is um, some sort of useful consolidation zone, and it should be a bottom. Switching from a credit contraction cycle into an expansion cycle doesn't usually happen at a top, but here's a bottom with some interesting activity. And I think this is too early to switch into the next cycle. May 14th, that's too early. So I would expect another bottom, and I don't know how far down, and it could be several more bottoms of bouncing and waving, and just more waving, and it looks like we're kind of following this circle. We'll see if we continue to. Um, yeah, and then I guess I'll point out on the circle too, like this kind of grinding activity along the shape of the circle was really bearish, and pulling the bull market activity way down to the neutral line. And same thing here, this grinding activity along the circle is really bearish, and it was flipping over all the bull activity. So if we come back down and do some more grinding, that's going to be a really bearish signal, and it's going to start flipping this stuff over. And so the bulls really need to get up out of here now. And the bears, it's pretty good for the bears to just grind on the circle, and that'll flip all the technicals upside down. Just some more grinding on the circle, and that would probably result in another kind of move down like we got here, down towards the inside. But also possible to just kind of get in here somewhere and go whatever, just kind of in this circle in general. But just down here as a bear target and out of here as a bull target. And then I guess I'll go over the general financials, which is the interest rates, I guess, are the key indicator to pay attention to. And we have 4 or 5 different things to look at in the monetary uh, kind of sphere that have a lot to do with the interest rates. So right now, I mean, we have the US dollar as the world. It's not only the reserve currency, it's like the world, it's the dollar standard. It's what's backing all the other currencies. And so the other currencies, I guess there's the inflation scenario and the deflation scenario. And they're more related than people think, because the dollar is like the backing, the standard for the world system, and the other currencies can inflate their own currency and devalue relative to the dollar in order to decrease their debt burden, and for commodity countries to make their commodities cheaper to sell so that they can pay their debt. And so that's what countries with a lot of debt are going to be doing, is devaluing their currency. And the US dollar really has no opportunity to catch up with them, because like 70% of the entire worldwide monetary supply is dollars. So like, I mean, if like the ECB is big, but I mean, it's the dollar's like 70%, ECB is, less than the remaining 30%, whatever it is. I don't know the exact number, but I mean, if you just say it's 20% or something like that, like if the US printed like $1 trillion, if the EU prints $1 trillion worth of the euros, like that is way, way more inflationary because it's relative to just 20% of the supply, whereas the 1 trillion in dollars is relative to the 70% of the money supply. So I mean, the US would have to print 3 times the amount of Europe, and that's the biggest case. But like versus, I mean, I'm in South Africa right now. That's a commodity currency with a reasonable amount of debt. Um, so if South Africa wants to inflate, I mean, there's no way that America can try to keep up with them. I mean, they'll just deflate relative to the dollar. And all of the countries across the world that have either high debt or commodity or both have the ability to deflate against the dollar. So that's sort of the base case, is that currencies can deflate against the dollar, and that will, I mean, push the DXY up. That's like the dollar versus a basket of currencies. The euro is really big in the DXY. But the dollar versus specific currencies, that especially commodity currencies like Brazil or South Africa, are sort of commodity currencies with high debt. And then you have like Canada and Australia are bigger economies that are commodity currencies that are at risk, or like countries like India that have higher debt are at risk of deflating against the dollar. So that's one idea kind of for dollar trade. Um, but then the idea of inflation versus deflation is, what are the worldwide commodities doing relative to those currencies? In a deflation scenario, the prices of the commodities are actually falling faster than their own currencies. So you'd have the dollar higher than the other currencies. The other currencies would be falling relative to the dollar, and that would be pushing the DXY up. But then in a deflation scenario, you'd have the commodities falling even faster than those currencies, and that would be a deflationary mess. And that may not be avoidable, and that's similar to the scenario that happened in the Great Depression. Is you have uh, monetary inflation, but you still have the commodities dropping relative to the currency, and that's a deflation scenario. And that deflation scenario would be good for gold. So you'd have gold, uh, you'd have the dollar devaluing to gold, you'd have other currencies devaluing to the dollar, and then you would have worldwide commodities devaluing to those currencies. And that's the sort of deflation scenario to look out for, and that would be a big downward pressure on the stock market, on the US stock market, even though the stock market's a little bit separated. And then the inflation scenario, you probably would still have other currencies deflating to the dollar, but you'd have commodities going up in price relative to their currencies and possibly to the dollar. And so commodities would be going up, and in that case, gold would be still pretty good. It should still be doing better than the dollar. Um, but in that case, silver would get really interesting, because silver is a commodity and a monetary metal. And so during deflation, it would be dropping in value as a commodity, and it would be less interesting. But if you get inflation and currencies going down, then silver could go up pretty big relative to all of that. So that's just sort of the monetary stuff relative to each other. And those are trades that you can make on the FX market, or just precious metals, or looking at the bonds is the big signal. So if we are headed farther down towards negative interest rates or lower into negative interest rates, that is an indicator of a slower recovery and deflation. And if the interest rates start going up, that'll be an inflationary indicator. And inflation would be really good for the stock market, and deflation would be bad. And that's kind of the monetary outlook. And those are trades that you can make, just currency to currency. Sort of the dollar can just crush other currencies, because they just have the ability to deflate inflate their currencies. And there's not really much that the U.S. can do about another country inflating their currency. And so that would just push the dollar up relative to that other currency. And so that's kind of the outlook now. Um, just probably a 2 to 3 year kind of outlook of how the different monetary assets are relative to each other, and then Bitcoin is the big wild card that if it gets adopted as some kind of world money, it goes to the moon. And if it doesn't work and nobody cares, it goes to zero. And most likely it'll be somewhere in between. It'll probably be around and just crazy, hard to predict. And um, yeah, I mean, the upside on that, I wonder, let's see. Well, so far, Bitcoin has trended a lot more like silver than it has like gold. And so I think Bitcoin would do way better in the inflation scenario than the deflation scenario. Just from watching how it's trended relative to gold and silver so far. But yeah, of course, it's just like crazy volatile and doing its own thing at the same time. But if you look at the Bitcoin graphs, it actually follows the crash pretty tightly, just like silver does. And and yeah, so I guess probably right now we're getting projections for negative interest rates coming, which would point at a slower recovery and a deflationary scenario right now. And that could switch to inflation at any time. So it's possible we get deflation for a few years and then inflation. And maybe gold is good right now, and then maybe silver and Bitcoin are good later. And just kind of the monetary outlook. And as far as trading the stock market, man, it could, depending on which scenario, it could go wildly different directions. And it's just really dangerous and crazy right now. And yeah, and some of these other trades are probably less crazy, and it might be interesting to look at. So I'll uh, I'll wrap that up. That was longer than I was really planning on, and I would expect. What are we getting now? Yeah, it's just kind of blah blah blah. This thing's just kind of grinding around on the circle, and that looks bearish, but not immediately bearish. Like it's just kind of turning over a little bit. And so I would expect it to just kind of stick on this circle until it can get bearish. And I don't know if we can get I don't know if we can get back up here in the bear scenario, because I thought this wave here was gonna make a move, and we didn't really make a move up, and now we're kind of getting more bearish activity. So that may be the peak there, um, in the bearish case. And then of course, in the bullish case, all of the bear talk would be over, and we would just get out of here. So that's kind of the look, and people are placing their bets on whatever they think is going to happen. But to me, it looks like a deflationary scenario, and it's not super deflationary yet, but it could get more deflationary. And I think the key thing is we had a big liquidation. That drawdown that we had over here is a huge liquidation. And so I think there's still liquidation risk right now because we're still in the credit contraction cycle. Even though the Fed has made all these programs to make liquidation work better and the banks are functional again, um, I think it's still possible to get it. It's possible to get another liquidation waterfall here, but it's probably more likely to get just a little bit of a turnover, just based on the shape of everything right now. And then when we switch out into the positive market, it should look okay for a little while, but then it's not liquidation that's an issue anymore. It is going to be solvency that's a big issue, because the liquidity issue has to do with loans being available, banks functioning. But when you get into the solvency issue, that's all cash flow and whether people can pay their bills or not. And I mean, companies being completely unprofitable and people not having money to pay their bills. I mean, I know there's stimulus coming, but that's not the same thing as the whole economy actually operating and producing things. Um, and that is the big risk going forward, is more solvency, if people can pay their bills or not. And when people stop being able to pay their bills, the banks can't not do a whole lot about that, and the Fed cannot do a whole lot about that. And then if other countries start inflating their currencies to decrease their debt burden and sell their commodities, then you get into kind of a mess, and yeah, all right. So that's good. Not investment advice, and check out my playlist. I have financial education stuff where I talk about this stuff a lot. And which video is this? This was AstraZeneca, right? Yeah. So I have a health playlist that has a bunch of videos like AstraZeneca, and I would expect to keep seeing these little news flashes about, oh, phase 1 trial here or whatever that, and you keep getting this little jump, and it usually will reverse down pretty much immediately. So those are interesting little kind of you can kind of short the news if it goes if it gets too hypey. You can short the stock back down to a normal price, and then that's just sort of like a day trading thing that you can do. And I will wrap it up, and happy trading.